I'm Laura Mandaro with MarketWatch. Xerox posted a 17% increase in first quarter earnings, and shares are trading around July 2000 highs. Joining me to discuss these earnings is Jeff Embersitz, a technology analyst with Shareholder Value Management, his own firm that provides investment research for hedge funds and mutual funds. Jeff has been a portfolio manager in the past and, for full disclosure, owns shares in Xerox competitor Hewlett-Packard, but no position in Xerox. And Jeff, let's just start with talking about Xerox's earnings. Stock's up a lot. People seem excited. What looked good, and where were the weak spots?
Laura, I think what looked very good was the earnings were solid. They had good cost savings, which dropped to the bottom line. They beat the estimate by a couple of pennies.
Mm-hmm.
Those were the good news. I think the things that weren't so great is it looks like they might be losing share. For the first time in a long time, they didn't talk about market share gains or unit volumes across the different product lines.
Mm-hmm.
And so I believe there's a little more pressure on them versus competitors now that multifunctional devices are becoming more competitive.
Right, right. You put recently an underperform rating, is that right, on the stock? Does this report change your mind at all about it, or what are you looking for to get you more excited about it?
Well, the company's done an excellent job of executing. I've been following it for 3 years, had recommended it back at the $12 range with a $17 target.
Mm-hmm.
Hit that target, went to neutral. Teams continue to execute. I think it's just a matter of where do you want to put your incremental dollar, where do you get more bang for your investment dollar.
And now you mentioned that they compete quite heavily with Hewlett-Packard and some other big tech firms in this market for multifunctional devices, these fax scanning copy machines. What from Xerox's earnings can we learn about these other companies' earnings? Anything?
Well, I think one of the key things about the earnings is it's a shift down to lower priced products, which favors Xerox and Hewlett-Packard because of their size and scale. I think one of the real competitive disadvantages is Lexmark. They've been stuck at the low end. They haven't been able to move up into the higher end of equipment. So their product is being really driven down price-wise. And Dell's 15% of their channel, and we know that Dell isn't doing very well competitively either. That's something I had to sell on for a while. Okay. So when you look at Lexmark, I think they're probably the big loser in this, and Kodak is also at risk.
No, just again for disclosure, do you own any positions or shorting any of those last two firms?
Right. I'm long Hewlett-Packard, have been since Mark Hurd joined, New Market NCR. I've been short Kodak since about $38 and Lexmark since $80.
Okay.
And I think they just have a lot of headwinds and trouble in front of them.
Okay, that sounds good. Good insight. Well, again, I've been speaking with Jeff Embersitz, a tech analyst with Shareholder Value Management here in San Francisco. I'm Laura Mandaro with MarketWatch. Thanks.